No matter what type of trading you want to do, whether that is crypto, Forex, stocks, futures, or even meme coins, you have to make sure that the strategy works. If you want to take trading seriously and start to make real money from it, then this is a required step. You cannot just say, oh, I'll do it later, or I could just learn as I trade more and more. No, that's the wrong way to do it. When you go buy a car, are you going to walk into the dealership, slap a bunch of money down on the table, and take the keys and drive off? No, of course not. You're going to do your research beforehand, figure out if it suits your needs, what the miles per gallon is, and if it even drives well. All these things you have to do before buying that car. Same thing goes with any type of trading strategy. You have to make sure that it works properly, and if it works in certain market conditions, and most importantly, do you even feel comfortable enough to trade the strategy months on end? Now, there are two main ways of testing a strategy to make sure it works and if it is right for you. The first is backtesting. This is where you're going to be using previous market data and pretend that is the real deal. Backtesting is not only efficient because you get to use previous market data whenever you want, but you are also able to fill up a trading journal a lot faster. With a trading journal alongside of you, you will be able to write down all of the trades you place and analyze whether the strategy is actually profitable or not. Let's get into a little bit more detail about backtesting and let me show you exactly how to do it. All right, so now that we are on the computer, I'm here on TradingView specifically to show you guys exactly what you are going to do in order to do your backtesting. So this is just a regular chart. This is USD/JPY. I'm just at the most recent time. But before we even start going into the charts, what I'm going to do is open up my side, have like both of these things side by side. It'll be a little bit easier. This is a trading journal. I will have it linked in the description down below for you to go make your own. It's completely free. It's the exact one that I use. But it's important to have these both next to each other at the same exact time. And the reason for that is because as you are placing and backtesting the strategy on the TradingView chart, you want to journal it into the journal itself so you can calculate whether the win rate is profitable and the risk reward ratio is profitable. So you need to collect some data in order to understand whether the strategy works. So in TradingView, you're going to go into replay trading. So on the TradingView chart, you're going to see this button up here called replay. This is what you're going to be using in order to backtest the entire strategy that you are trying to learn. So click here for the bar replay. And down here, you're going to see select bar. What we're going to do is we're going to click this little drop down menu and we're going to select random bar. This is going to make sure that we aren't having any biases. We don't see what's going to happen in the future, right? So it's just going to select a random bar at a random moment in time for us to do our backtesting. So I'm going to click here. It brought us to a random point in time. I will zoom out a little bit. So should we go find the chart? There it is. Okay, so it's super high up here. Probably best to actually delete some of your previous trades because it seems like one of my previous trades is still there. But for this instant, we will just delete those, and then I'll zoom in a little bit here so it's a little bit easier for us to see the chart. So like I said before, make sure you have both of these side by side because you want to journal at the same time that you're trading. So as the bottom of the TradingView chart, you will also see this like sell and buy button. It essentially creates like a little demo account for you to actually trade with while you're doing your backtesting. You can use this if you want to. I prefer to just do my own analytics. I really don't need to know the exact monetary value of what I'm going to be trading with because the exact money value doesn't have any use for me. I need to know my risk reward and what my win-loss ratio is. Whether I made $100 or $10,000 or $1 million in one trade doesn't matter. But the wins and how I won the trade matters. So let's just say, for example, we're here on this chart and we're just going to click play and let the chart run out. We could increase the speed if we want, decrease the speed. But let's just say we're testing some strategy and we want to, the new strategy says we're going to place a sell at this position. So let's just say, for example, boom, we're going to place a sell and we're going to do this, right? I'm just completely guessing right now, but just for the sake of the video, we're going to just explain it. So there we go. There's my entry position. I have technically like entered into the trade, whatever you want to say. And then we are going to just click play. And it looks like we are still in the trade, almost breaking even. Okay, we're going up and down. And boom, we hit our stop loss. Okay, it is what it is. Well, right? So here we have our first losing trade, right? It's unfortunate. You're trading a new strategy. It is what it is. So now in the trading journal, you're going to obviously just go here, click loss, and for the risk reward, you could either put -1 or you could leave it 0. And then basically if you want to put percent risk, you can put 1%. There's also the pair here that you're trading. So you could look at the other pair and also the date. Not entirely required to fill out. Those are just extra pieces of information. But the most important is the win rate and the risk to reward ratio. So let's just continue on to the chart here. We're just continuing, blah, 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 blah. The chart is moving. Okay, let's pause it right here. Let's say we get another confluence for the strategy. It's telling us to go long. So we're going to put an entry position here. We're going to go up here, and we're going to try to hit a risk reward here. Okay, boom. So we continue to click play, floating in profits, and then boom, we spike into our take profit hitting 1 to 1.8. So we go back here, we click win, and then we can type in here 1.88 risk reward. So we can see automatically how easy it is to just stop and go to random points in time on the actual trading view chart. And at the same exact time, you're filling up your trading journal very efficiently. And we can see here that it's already automatically programmed to show you what your win and loss ratio is. And you also have your stats here on what your risk to reward ratio is. So if you fill this up for 10, 20 trades, you will see that you will be able to determine what your win-loss ratio actually is. And you will be able to determine whether you are profitable or not. Also, when you do set up your chart, don't be an idiot like me and make sure you actually have your slices to the right color, because it might get a little confusing here. Make sure your losses are red and your wins are green. All right, there we go. Now it looks a little bit cleaner. So for this instance, let's say we did our trading and we played on our replay mode. We went back, we filled in our journal, and now we can determine that we have a 66% win rate with a 33% loss rate. So you can analyze this alongside your risk to reward to determine whether it is actually profitable or not. So that was back testing. Now let's talk about forward testing. This is going to take a little bit more time than back testing since we are only going to be using the live markets. This is where you're going to be using a demo account and you want to use the exact same demo account for the next 2 to 3 months. I want you to treat it as if it's a real account with real money. As you trade more and more, make sure you continue to fill up your trading journal from those live trades. What you might even notice is that your win rate might change even though the strategy is the exact same. Why is that? Well, it's because of human emotion getting involved. You might overtrade a few times or you might take profits too early. This is why it's important to forward test as well, because you need to prepare your trading psychology. And when you start to use real money, you will feel the real temptation to just place a bunch of trades. Just force yourself to only take a certain number of trades per week. So once you hit that number, you completely stop and you wait until the next week to continue. After at least 2 months of forward testing, you should have enough data in your journal and enough trades on the demo account to see if you can actually make some profits. If not, that's okay. Figure out what went wrong. Is it the strategy or is it your trading psychology? It's not easy and it will take time for you to adjust, so just be patient and do not rush the process. Thank you guys so much for watching. I'm hoping my little 2 cents can help you guys understand what trading is all about and what tricks you can do to help your progress a little bit faster. Feel free to DM me on Instagram if you have any questions, and as always, good luck trading this week. Peace.